So I have delved into three of the most challenging times to invest in the stock market. And a lot of investors lost more than 50% of their money, and some will never fully recover. So is there a good time to buy stocks and bonds and just keep investing, or should you wait for the price to drop? This is the truth a lot of people might not want to hear, and I'm going to tell you what I have discovered. What's the best way to handle these financial crises? Should you never invest your money again, only try to sell high and buy low? Or stay invested all the time? It's early 2020 and the world is gripped by an unexpected crisis, the COVID pandemic.
The stock market is plummeting as fears of the coronavirus intensify.
Unemployment rates are skyrocketing as businesses shut down.
Experts warn that this economic crisis could last for years.
As news of the virus spreads, so does fear and uncertainty. People across the globe are worried about their health, their jobs, and their financial future. Investors everywhere are watching their portfolios shrink, and investors are feeling to panic. So every 10 years there is a market crash, and the market has been doing so well for so long, so I think it will collapse this time. If I sell now, I can avoid further losses, and I will come back when the market is more stable. So let's go back to the early years of 2000. The dot-com bubble had burst and the S&P 500 dropped by nearly 49% from its peak. Wait! Investors were panicking, thinking it will never recover. Yeah, this is worse than anything we've ever seen before. It's going to take forever to recover. I'm getting out now. Yeah. It took several years for the S&P 500 to recover, and many who sold missed the eventual rebound. And here is what one investor said back then. The economy is in shambles. We might not see recovery for years. But as we now know, the market did recover, and those who stayed invested saw significant gains. Missing the best days while holding out for the lowest price can significantly reduce returns. For example, some of the best market recovery days happened shortly after a crash, during the COVID-19 recovery. When we look into March 24, 2020, the S&P 500 had its biggest one-day percentage gain since 2008, up 9.4%. So I didn't expect to bounce back so quickly. If I had sold, I would probably have missed a lot of money. In April the 6th of 2020, another significant gain of 7%. And next, the 2008 financial crisis, the S&P 500 fell by 57% and fear was at an all-time high at the moment. The market began to recover in 2009, and by 2013 it had surpassed its pre-crisis peak. Again, those who held on were rewarded. But the recovery came quicker than many anticipated, showing once again the risks of trying to time the market. Then we dive into key takeaway number 2. Investing regularly, regardless of market conditions, is advisable. See a market drop as a great discount to buy new assets. The best thing to do is buy when the market is dropping, because you can time the market low. But if you think deeper about it, do all companies do badly in crises? Or do some actually profit from the situation? So even during a crisis there are always companies that do well and others that don't, right? That's just the economy. So during COVID-19, while many businesses like restaurants struggled, others thrived. Tech companies such as Amazon, Zoom and Netflix saw massive gains as people shifted to online shopping, remote work and home entertainment. So finally the COVID-19 market dropped in March 2020. The S&P 500 dropped 34% in just 1 month. And again, investors were faced with the same dilemma. Do I buy or do I sell? The fear was real and the instinct to sell and cut losses were also strong. But then something remarkable happened. By August 2020, the S&P 500 had already recovered to pre-pandemic levels. Those who stayed the course saw their investments bounce back quickly. Historical data shows that while recoveries can take time, the market has always rebounded from its lows. Then we go into key takeaway number 3. Diversification in a crisis is key. Don't bet on one company, but have thousands of companies in your portfolio. This way, even some companies struggle, others will thrive and balance your overall portfolio. And if you want to know which ETF is the best to buy, you can't miss this video, because I will tell you the best ETF to buy at this moment, and it is really easy and simple for you as a starting investor. See you in the next video.